Your market news now. Global stocks are broadly lower, while the US dollar also weakened earlier today as investors weigh corporate earnings and economic growth outlook in a busy week. Last week's US bank earnings came in stronger than expected, and this week brings results for big tech and a number of big consumer brands in the United States. Meanwhile, Kumba Iron Ore said its output increased 14% to 9.4 million tons in the first quarter, lifted by strong production at its Kolomela mine. South Africa's largest iron ore producer says it's seeing improved demand from China, which is the miner's main market, offsetting a slowdown in other markets. To talk to us about this and much more, we are joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you so much for your time. With this call it probably red screens when you look at what's going on from the Asian, European, and probably somewhat to a certain extent when you look at US futures. What's the market sentiment right now? Are we still going with a cautious approach?
I think absolutely. You've seen the market bounce very hard, both locally and offshore, in the last, call it 4 to 6 weeks. And I think the market is cautious, as you mentioned, and I think we are waiting for another catalyst to see if we're going up higher or kind of back down again to where we were in February. So we're looking towards those quarterly earnings in the States. You've got Fed decision coming on the 3rd of May. So I think it'll be those types of catalysts, those very heavy data headlines that we're going to be looking out for that's going to move the market. But at the moment, I think sentiment is very much just wait and see, trade water, and see if there's another catalyst for direction.
The one thing that I found quite interesting is that Purple Group released their results yesterday, and if you look at the different conversations that were happening around Purple Group, especially when the financials came out, how do you explain the narrative around Purple Group at this particular point, given the fact that it's not performing the way, I guess, most people or the enthusiasts would have expected it to?
So, I mean, it's a business that has got quite a lot of hype around it, a lot of retail interest. Like you mentioned, they had results yesterday, mixed in some ways, some good positive things. You've obviously still got the fact that the business isn't properly profitable at the moment. So good and bad. You've got to look towards the main part of the business, which is easy equities, which is essentially largely brokerage driven. So I think going into a tougher environment from an equities perspective, it's going to be interesting to see how that plays out. So for now, I understand some of the hype, but for now, I think I'm happy to sit on the sidelines.
So one of the things that does come out, especially when we talk about companies like Purple Group and perhaps even some of the smaller caps companies, perhaps even Renogen to an extent, we always bring up the idea of valuation and how important it is. For the benefit of our viewers, perhaps you can unpack for us the idea of valuation and why it's so important.
Absolutely. So valuation is something that is used by brokers, investment managers, and the like. And there's lots of ways to value a business and lots of metrics that people use. I think the most common one that you'll see banded around is PE. So the price you pay for a round of earning is essentially what it comes down to. And I think the important thing is that you use valuation to figure out if a company is overvalued or undervalued from where it's trading from a share price perspective. But I think also importantly to remember is that the market doesn't always care about what your spreadsheet says. Sentiment in a positive way and a negative way can drive shares a lot higher than they're supposed to be from a purely valuation perspective and a lot lower than they are from a purely valuation perspective. So it's just a sanity check and one of the tools in the arsenal of an investment manager.
So speaking of a sanity check, the other one that caught my attention was Copper 360, and this company listed about a week ago. And when you look at that performance, it's been quite interesting to watch. And you wonder whether this is a short-term thing or whether the market was really hungry for an IPO. What do you make of Copper 360's performance?
So, I mean, the share is up, I think, 140% since listing, which is incredible. Lots of things to like about the business. Pure copper play, which is very attractive, a green metal, one that a lot of the miners are looking to get access to. It's one that there might be a deficit in coming years. They've also got some volume growth coming through as well, which is very positive and actually quite rare. So there's a lot of very good things to like about this business. They're also ramping up. So I think you do have a little bit of execution risk in the background. But again, I can understand why there's a lot of positivity around it. If you look at where it's at the moment from a valuation perspective, back to valuation, I think it's maybe run a little bit hard in the last couple of days, maybe got a little ahead of itself. And like I said, sentiment can sometimes drive share prices higher than they might be on a spreadsheet. So a lot to like, but I think it's run a little bit hard for my liking at the moment.
On a broader note, when you look at sectors of the economy, which do you believe will tend to be a little bit more vulnerable as we approach the second half of the year?
Well, I think the kind of obvious one is if you look at kind of in the retail space, you've obviously got the additional cost pressures that load shedding bring on. You've got a more constrained system coming on board during winter. You've got a more constrained consumer with a high interest rate environment. So I think the retail space is one that might come under pressure in the next few months. But I think at the same time, I think you're going to get a nice opportunity for a kind of medium to longer term investment. But I think they are the ones that are going to face the most pressure in the kind of shorter to medium term. But like I said, that also might present a longer term opportunity.
With this said, we've got a few days left until, the month of April does wrap up. How do you characterize the performance of local stocks, at least for the month of April so far?
So I think the biggest movers are the big rand hedges. So you look at the BTI, you look at Richmond, you look at Bidcorp. It's very much been a rand hedge story that's essentially moved the big kind of gainers for this month. So that's kind of played out. I think there's a little bit of nervousness around South Africa and our GDP growth and the headwinds that we face from a power perspective, et cetera, et cetera. So I think the South African-centric stocks are kind of treading water, but the ones that are moving that have moved the most in the last month or so, and pretty much for the last couple months, is the big offshore hedges. I think that's where South Africans are looking to at the moment.
So with that response, with the concerns around, GDP growth and electricity, what are your clients calling and being concerned about? What's keeping them up at night?
I think that's the biggest thing, right? I think it's from a South African perspective, GDP growth, headwinds and the like, but also you've got kind of bigger, broader global sentiment perspective of, does the US go into a recession? How big is that, or how deep is that recession? What happens with the interest rates locally and abroad? There's still a lot of things kind of hanging in the background of it at the moment. So I think the biggest thing is that I feel like investors are struggling with is conviction. It's where do we go from here? And if you look at it objectively, it's difficult because there's still some information that needs to flow through. Other than, I think, the bond space, which is giving you very, very good yields at the moment, I think conviction is low across the board, locally and globally.
Before I let you go, just quickly, when you talk about the bond space, do you get a sense that the bond market, stock market, as perhaps even the Fed, are in sync in terms of where they believe, or rather what they believe will bring about a pause in interest rates?
So, I mean, if you look at the bond market offshore, so we've got that Fed decision next week. Price about an 86% probability, or that's what they're pricing in, of a 25 basis points hike by the Fed. Equity market is pretty much the same, although the equity market's maybe a bit bullish about what interest rates do towards the back end of the year. So I think that's where we're at. I think anything obviously better or worse will surprise the upside and the downside. But for now, I think 25 basis points is very much the kind of consensus for what the market's pricing in at the moment.
Martin, thank you so much for your time. That is Martin Smith, who's a portfolio manager at Anchor Capital, giving us the latest when it comes to the markets. That is it from me. We're going to take a quick break, and when we come back, we'll have more news for you.